When President Donald Trump won the election in November, the markets skyrocketed.
All right, stock markets surge on the news of Mr. Trump's victory.
1,500 points for the Dow today.
The Dow actually hit a new record high.
The overwhelming sentiment from investors was that this administration would be good for business, good for the economy. It's what Trump campaigned on.
Inflation will be in full retreat. Our economy will be roaring back.
Now, not even 2 months into his presidency, the talk of a possible American recession seems to be everywhere.
The R word, recession, wasn't even in the vocabulary a few weeks ago.
And Trump didn't rule out the possibility of a recession in a recent interview.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
That makes it sound like he's willing to trade a potential recession for the values and the goals that he has for the United States.
So how did the world's largest economy go from booming to stoking fears of a recession in just a few weeks? Let's start with the one place everyone is watching like a hawk. If you want a real-time indication of where things are at with the economy, one place you can look is the stock market.
It is right now the one thing that is signaling sort of a red light in terms of recession.
Now, we should make it clear, the US is not in a recession, and most experts aren't suggesting one is imminent either. But that red light we just heard about, it's a huge shift. And it may not be surprising if you've been paying attention to the stock market, which has cratered in the last few weeks, wiping out all those gains from Trump's election, and more.
Breaking news from Wall Street right now. The markets just closed, clocking in their worst day of the year. Today was the worst day for the NASDAQ since 2022.
Take a look at the major indexes over the past month. The S&P 500 lost almost 10% of its value. The Dow Jones down nearly 9%. The NASDAQ down about 13%. More than $4 trillion of market value has been lost in under a month.
Technically, the bull market that ostensibly began back in late October of 2022, that bull market is over.
This is the biggest bout of market volatility in years. And a lot of people, not wanting to check their 401ks, their retirement accounts, of course, because of this huge dip.
And a lot of it has to do with how investors are feeling about where the economy could be headed.
The stock market is not the economy, but it does indicate people's moods about and prospects for companies, because the stock market is forward-looking in the sense that people are expecting stock returns, dividends, those sorts of things.
I do think the stock market is a bit of a self-fulfilling prophecy for the economy, and that if people see the stock market down, it overall lowers confidence.
And you can understand where that low confidence is coming from. Just think about the whiplash we've seen over the last month.
President Trump announced sweeping tariffs.
President Trump's tariffs against Canada will now be put on hold.
Donald Trump's tariffs are in effect.
To be clear, for the 50%, is that going to go into effect on Canada or no?
Which one?
The 50% tariffs?
I'll let you know about it.
The chaos has been hard to keep up with, and all of that uncertainty is making it tough for investors to know where to put their money, leading to those huge sell-offs.
Every time Trump announces tariffs, if he thinks it's good for the American economy and good for American business, you should expect stocks to spike. Instead, they crater. So he keeps announcing it and then backing off, and announcing it and then backing off. Most recently, markets have been like, I don't know what the hell is going on. I don't know how anyone can make any decisions.
And all of that uncertainty is showing in another place, gold. It's often considered an investment safe haven in turbulent economic times, and its price has increased 11% since the start of the year.
So I think this sort of shock and awe campaign is definitely digging into the psyche of Americans, and naturally one can expect that people might go towards the safe havens.
There's some pretty unprecedented policies being touted, and that has everybody uncertain. And I think uncertainty is the big factor here.
And you can imagine Trump's comments about being in a period of transition doesn't temper those fears or that uncertainty. He's even gone so far as to say he's not actually concerned about it when it comes to decision making.
Some of these exemptions that have been announced and some of these temporary delays, have you been influenced in those decisions because of the market reaction?
No, nothing to do with the market. I'm not even looking at the market.
I do think that the Trump administration's thinking is that the stock market's going to go through a little bit of a blip, and eventually investment will flow into the U.S. as they plan with these tariffs, and it'll be gangbusters again. I think other folks are wondering if this is going to just be a deeper and deeper slide, and that the stock market will sort of take the economy down with it.
And the fear now for economists is that the uncertainty that's rocking the stock market will trickle down through the rest of the economy.
It makes investors, businesses, consumers all very nervous.
Economists track a lot of indicators to get a sense of the economy. Things like jobs numbers, GDP, inflation, retail sales, and consumer sentiment. A lot of that data lags a month or two behind, so it's hard to say exactly where the economy is right now. But there are a couple of warning signs starting to show.
There are more yellow flags than red flags for the US economy, but they are out there and they're part of the discussion.
Take consumer sentiment, which basically measures how people feel about the economy and their own financial situation. The University of Michigan's tracker shows sentiment fell in January after rising for 5 straight months. And its report from last month said people's long-term expectations when it came to inflation exhibited substantial uncertainty, especially concerning policy changes under the new presidential administration.
We just keep going back to this word, uncertainty. I think consumers are starting to wonder how these tariffs will play out. It's part of an everyday discussion. They're very much aware that import prices could increase.
What we are seeing actually is that households are not only unhappy about the general state of things in Washington, they are starting to worry about their own economic situations.
And a fall in consumer sentiment could be a uniquely big problem for the US because consumption plays a huge role in the American economy. 70% of its GDP comes from consumer spending. That's high. So people going out and buying cars, food, clothes, it matters.
Consumers' sentiment is actually really important in thinking about the near future of the economy.
Because if consumers are worried about their situations, then they tend to pull back on spending. And it doesn't take long for that to affect businesses. It may already be happening.
Delta Airlines warned it expects profits to be lower than previously indicated because of a slowdown in both business and consumer spending and travel.
Kohl's and Dick's Sporting Goods adding to the flood of companies raising concerns about the U.S. consumer.
And it's not just the big corporations. The National Federation of Independent Business tracks small business optimism. In February, its uncertainty index rose to 104, the second highest recorded reading. And it showed only 15% of businesses, after adjusting for normal seasonal changes, plan to create new jobs in the next 3 months.
Businesses are reacting to this uncertainty with what they usually do is namely become very conservative about their spending and their investing habits.
If you were a CEO right now, and you had major investment projects in front of you, you might just think to yourself, I might just wait it out for a few months and see where all this lands.
And that's where the problems start to feed each other. If businesses pull back on investing, that could mean fewer new jobs, maybe even job losses, which may mean consumers don't feel safe to spend.
Now, if CEOs do this and families do this, and we all do this, then spending plummets. And if that's the case, that's the first step that causes a recession.
Now again, the US is not there. That's the good news. But as we've said, how people feel about this really matters. Recessions can be self-fulfilling prophecies. And according to the analysts we spoke to, the uncertainty around all of this doesn't seem to be going anywhere anytime soon.